Alright, for this video I want to go over the IRS Form 8962 Premium Tax Credit Form for 2022. So the sample form we're going to be looking at here is for a taxpayer, Jane Doe. She's a single filing taxpayer, no dependents. And she does have a qualified health insurance plan that she enrolled in through the marketplace. And so she's got some advanced premium credits which she has to reconcile on this form. Now I've got a couple pieces in front of us. Obviously we have the 8962 itself, and it is part of a full tax return. So we can go through Jane's full 1040 and we can see how the 8962 interacts with everything else. Now we also have the 1095A that Jane received from her health insurance company. So the 1095A is certainly necessary in order to complete the 8962, so we'll go through this as well. And then I do have a copy of the Form 8962 instructions up for 2022. And the reason why we have these available is because when we walk through completing the form, there are tables in the instructions which we're going to need to reference. So in particular, we're looking at the federal poverty line limits for the states. That's necessary. And then there's another table covering applicable figure percentages, which is how we calculate the monthly contribution for the taxpayer. So we'll go through all this in more detail. We'll come back to this. But first, we want to have a look at one slide I had prepared here, which covers some of the background on the form, why we need to do it, and then also the fact pattern that we're going to be working with. All right, so just to recap again, the 8962 is used by taxpayers that have purchased a qualified health insurance plan, and it's through the insurance marketplace. Now, the reason why this is significant is because if you purchase a health insurance plan through the marketplace, and you qualify for certain income limits, you might be able to get what's called the advanced premium tax credit. Now, the advanced premium tax credit effectively supplements or it subsidizes the annual insurance premium you have to pay to your insurance company, right? And so because you get an advance of this premium, you need to file the 8962 with the information you received on the 1095A to reconcile how much of the premium tax credit you can actually get, and then how much did you receive as an advance, right? And so at the end of the year, the taxpayer, after they calculate the form, and we'll see this as we go through it, but you might actually get more of a credit back, so it'll reduce your taxes, or if your income was higher than you initially projected, you might actually have to owe the government some money, right? And so we'll get into those details as we go through the form. Now, this is really important because I see a lot of taxpayers miss this, right? If a taxpayer receives a 1095A and they have advanced credit amounts and they don't do the 8962, you're very likely going to get an IRS tax notice. Now, the reason you get a notice because the IRS needs to know, okay, based on how much we advanced you to cover your insurance premiums, do you actually owe us more money because you need to repay some of it? Or do we owe you money, right? Do you get additional credits because the amount of income that you have was actually understated from when you initially applied through the program? So the example we're going to look at here, I'm going to go through the fact pattern, then we'll go to the 1095A, I'm going to explain the columns, and then we'll look at the 8962. So in our example here, we have Jane Doe. She's a resident of Atlanta. She's a single filing taxpayer, no dependents. And Jane enrolls in a qualified health insurance plan through the marketplace. And when Jane enrolled, she provided an estimate of what she thought her income was going to be. Now, this is important because this is what factors into the advanced premium credit. So the health insurance plan that she purchased, the monthly premium, so the gross amount that she should have been paying or otherwise would be paying is $359.28 per month. Now, based on her income, the amount of the advanced premium is going to be $306.91 per month. So even though that her health insurance premiums are this $359 figure, she actually only pays out of pocket $52.37. And that's because the government is picking up the difference, right? That is the advanced premium credit. Now, she's enrolled in the health plan all year. The monthly amounts stay the same. So when we see the 1095A, all the values are the same. And so Jane completes her 8962 with her 1040, and she discovers that she's actually entitled to some additional credit. So she actually does get a little bit more money back because of her income, or her modified adjusted income for that matter. All right, so now let's have a look at the 8962 and the 1095s, and we'll start to figure out how these forms are completed. So let's first start with the 1095A that Jane received. So if you enrolled in a qualified plan through the health insurance marketplace, you're going to get one of these 1095As from your insurance company. So part one has the information on the recipient, right? So it's Jane Doe. We have the policy start and termination date, her SSN, and then the insurance company up here in box 3. And then in part 2, we have the covered individuals, right? So the plan that Jane set up, who are the persons that are covered under this insurance plan? Now, if you are a parent and you have multiple kids or a spouse, then you'll have your taxpayer name and spouse name up here, and then the covered individuals will include yourselves and all your kids. In this case, Jane is a single filing taxpayer. She's not married and she has no dependents, and so for that reason, the only covered person under this policy is her, right? Now, part 3, the coverage information, here's how each of these 3 columns works. Now, column A in this case is the monthly enrollment premium, right? So this is, think about it as the gross amount of the premium that you otherwise would be paying if you didn't have anything advanced. Column C is the monthly advance payment of the premium tax credit. So this is the amount that was basically funded by the government and paid to the insurance company on your behalf. Now, these amounts obviously vary from taxpayer to taxpayer. So the advance premium amount will certainly differ from what you see on your 1095A. That's not unusual. Now, in column B here, we have the SLCSP amount. So the SLCSP, this is regarded as the second lowest cost silver plan premium that's offered through the marketplace where you are. Now, this is not going to be the same as your monthly enrollment premium, so that's fine. The reason why you need this information is because when we complete the 8962 here, right, for the premium tax credit reconciliation, it not only has to be disclosed here in column B, but it is used in computing the amount that we have in column D as well, right? So the amounts in column B, column C, we'll get to how that's computed as well. But in other words, you need to input this information, you need this information, otherwise you can't accurately complete the entire form. All right, so we've got columns A, column B, column C, and then in the top here we have more identifying information about the taxpayer that's enrolled in the plan and information on the insurance company itself. All right, so once you have this information to start, what do you start entering first, right? I think a good place to start is the Part 3 coverage information. Get this entered into the 8962. So remember, we have column A, column B, and column C. Now, if you look at the 8962, column A amounts are reported here, column B amounts are reported here, and then the column C amounts, the advanced premium credit amount, is reported all the way here at the end in column F. Column C, D, and E, we compute separately when we complete this form. So again, we have the monthly enrollment premium in column A, the SLCSP amount, and then column C is the monthly advance payment of the premium tax credit. Those amounts are all entered here in column A, right? The annual enrollment premium, the annual SLCSP premium here in column B, and then the advance payment of the premium tax credit in column F. Now, you'll notice that we've entered the totals up here. So when you start part 2, if you look at your 1095A and you have amounts filled out for the entire year because you were enrolled the entire year, and the monthly enrollment premium amounts, all these amounts are the same from month to month, then you're permitted to simply enter the totals here on line 11 rather than enter the monthly amounts. If you're looking at your 1095A and you see the amounts change throughout the year, or let's say you didn't enroll until April, so you're missing January, February, March, then you have to individually enter each month into the 8962. You can't just enter the totals up here. In our case, when we look at question 10, we are entitled to just enter the annual figures in the line 11. We can skip entering all these amounts individually on a per month basis. Now, nothing prevents you from entering every month separately. Even if it's the same, you can do that. But for ease of completing the form, obviously, we can just enter the totals here on line 11 and then be done with it. Now, you'll also notice that the 1095As do report things in decimals, right, to the nearest cent. You don't do that when you complete tax forms. You do round. You are allowed to round to the nearest whole dollar. So that's why when you see down here on the annual totals, 431136, 4678.92, we have rounded up or down, right, depending on what it's closer to the nearest whole dollar. And so that's why you can see here on line 11 we have 4311, 4679, and then 3683 for those total figures. Now, once you have those amounts entered, then you can kind of start to look at part one, right? So part one is where we start to compute the amount that's ultimately going to be entered in column C, right, to the annual contribution amount. So here's broadly how this works, right? So part one, what they're trying to figure out here is based on your income and what percentage it is above the poverty line, that is going to drive how much of the annual contribution amount it is that you need to be making. So when we look at part one, question one, tax family size, enter the size of your family. This is, if it's you and your spouse, it's 2. If you have dependents, you add it, 1 for each dependent. It should reconcile with the figures on your 1095A. In Jane's case here, she's just a single filing taxpayer, so we just have 1. So we've left it as 1. And then in question 2A and down to 3, we have modified AGI. So your AGI modified is going to, for the most part, reconcile with your actual AGI. So when we look at Jane's page 1 of her 1040, we can see here that on line 11, her adjusted gross income is $28,400, and that is also going to be the same as her modified AGI. Now, the form instructions contain a worksheet to help you make adjustments back to modified AGI. But you'll notice here that if you don't have any dependents, your modified AGI is for the most part the same as your AGI, except for you make adjustments for tax-exempt interest. So if you have any tax-exempt interest, or if you take the foreign earned income exclusion and you have to complete a form 2555, you might have some adjustments there. However, in this case, none of those apply, right? So $28,400 is Jane's AGI, and that's also her modified AGI for purposes of these worksheets. Now, when we get down to line 4, the federal poverty line, this is where the instructions start to help when we're computing line 4, lines 5, and then line 7. So when we look at line 4, we have to pull the federal poverty line from the tables depending on the residence of the taxpayer. So we're not in Alaska, we're not in Hawaii, we're in one of the other 48 states and the District of Columbia. Now, if we take a look at the form instructions, you'll see what I mean here as far as the tables. So we get down to the tables in the instructions. Here are the federal poverty tables. So we have 1 for the 48 contiguous states and D.C., we have 1 for the federal poverty line of Alaska, and then we have 1 for Hawaii. Well, we're working with table 1-1 for the 48 states and D.C. So our family size here is 1, which means that the amount we enter on line 4 is going to be $12,880. So when we go back to the form, we can see that we've entered here $12,880. Now, line 5 is asking us to take the household income as a percentage of the federal poverty line. So if we divide the $28,400 by the poverty line, we get 220%. Now, once we have our 220% figure, we have to go back to the instructions, look at the tables, and figure out what is the applicable figure. That's the line 7 amount. So we have 220%. If I go back to the tables, Sorry, let me go back to the instructions here. So we're at 220%. If we go back to the tables and we look up the applicable figure, so if Form 8962 line 5 is 220, so if we scroll down here, we can see here, right, 220. So if line 5 is 220, the applicable percentage that we enter is 0.028, right? So it's 0.0280. So on line 7, we enter 0.0280, and that is our applicable figure. Now we complete the remaining questions in Part 1, 8A and 8B. So 8A, the annual contribution amount, we multiply line 3, that's the 28,400, or modified AGI, by line 7, all right? And then it asks us to round to the nearest whole dollar amount. So if, for example, if I pull up our calculator here, just so we can see how this math is working, we have 28,400 times 0.0280. So we have $795.20. We round down to $795, and that's how we get our $795 figure in line 8A. Now, the monthly contribution amount, divide 8A by 12, round again to the nearest whole dollar amount, so we have $66 per month. Now, because we had a health plan the whole year, we can just enter the annual total here in column C, right? So column C, line 11 is $795, but if you weren't able to use a line 11 because you had varying amounts for the monthly enrollment premiums, or if you had, if you entered the plan mid-year, right, so you weren't enrolled all 12 months, then you would take the $66 number and enter it into each of these sections down here for the months that you had the plan. Okay, so that's Part 1, and then that's how we figure out the column C amounts based on what we find in Part 1. All right, so now that we've done all of Part 1, and in Part 2 we've completed column A, column B, we just did column C, and we've completed column F. So the last two columns that need to be completed here are D and E, right? So the annual maximum premium assistance and then the annual premium tax credit allowed. So if we look at column D, it's asking us here, subtract column C from column B. If 0 or less, enter 0. In our case, it's not 0 or less, right? So if we subtract column C from B, so 4,679 minus 795, that equals 3,884. So we put that figure there. Again, if you're not using the annual totals, then you would have to do it for each line item down here. So if you're doing June, it would be the June column B minus the June column C, and that would result in June column D. But again, we can use the annual totals for this example. Then in column E, we have the annual premium tax credit allowed, which is the smaller of column A or column D, the figure we just computed. In our case here, we can see that column A is 4,311, which is much larger than column D, 3,884. So the annual premium tax credit allowed is going to be 3,884. Okay, so now that we've got all the columns populated, we move on down here to lines 24, 25, and 26. So 24 is asking us the total premium tax credit, enter the amount from line 11E, or add the amounts from line 12E through 23E and enter the total here. Again, because we're entering the annual amounts in totals, we don't have to deal with the monthly calculation. So we're entering the amount from line 11E, which is right here, the 3,884, and then line 25 is asking us for the advance payment of the premium tax credit. So this is the amount on line 11F. So there's the 3,683. Now, this is very important, right? So everything is pretty much the same, whether you get a refund or more tax up until this point. So on line 26, if line 24 is greater than 25, subtract 25 from 24, enter the difference here, and on schedule 3, line 9. Now, if line 24 is the same, enter 0. If line 25 is greater than line 24, leave this blank and go to line 27. So here's what's going on with this question and the rest of the form. This is where we figure out if we actually get more of a tax credit, so it lowers our taxes for the year, or we have to repay some of the premium tax credit. In our case, because line 24 is greater than 25, the $201 is going to be an extra tax credit for us. Effectively, what that means is that when Jane estimated her income to get the advanced premium tax credit, she probably overstated it a bit, which means that the amount of the advance payment should have been more. And so that's what's happening here. So this is, in effect, a true-up of an additional $201 that Jane is able to claim. Now, if the reverse occurs, right, if line 25 is greater, then that means you receive too much advance premium, and so you potentially have to repay it, right? So that's what would happen down here in part 3. Now, in our case, because we're getting a little bit more of a refund, we can report this on Schedule 3. So the $201, if I jump up to Schedule 3 here for the additional credits and payments, we can see in Part 2, we have other payments and refundable credits, the amount of net premium tax credit, $201. Now, once we have that entered, that is going to end up on page 2 of our return, down here on line 31. So we can see here payments, amount from Schedule 3, line 15. The $201 is treated almost as if it was a payment by us, a tax payment during the year, which means that it's going to lower our net taxes owed, and we could potentially get the money back, right? So $201 we're going to get as an additional credit. So long and the short of it is, not only was Jane required to do this to reconcile her actual premium tax credit with the advance portion, but by doing so, it helped improve her tax refund for the year. She gets an extra $201 back. So very, very important to complete this. I hope this was helpful. Try to be as thorough as possible. But if you do have any questions, please leave me a comment below. And of course, I always look forward to seeing you all in the next videos. Thank you.